So in this video, we're going to be taking a look at putting together your monthly spending plan. This video or this exercise should go hand in hand with module 2, measuring your financial vitals. Now, this is the main objective for module 2. It's putting together a spending plan, or what other people may call is a budget. Now, this has been one of the most critical things that I have done with my clients to date. And it's funny to me because this is something that you can absolutely do on your own, but for whatever reason, it's difficult to carve out the time. It's difficult to gather your statements. It's actually difficult to put together a real good budget or a spending plan. And the people that do come to me and they already have a budget or spending plan put together, most of the time, there's tons of holes in it. They forget to account for the traveling that they do. They forget to account for the gifting that they do. There's a ton of different line items in here that may not be accounted for in someone's typical spending plan or typical budget. So I wanted to make this video for you, walking you through the process of creating an awesome spending plan so you can purpose how you are spending your hard-earned money. I don't want you to think about this as an exercise to limit your spending. I want you to think of this as an exercise to purpose your dollars. You get to spend your money in the areas that are most important to you. So we're going to go through this line by line, and I'm going to kind of help walk you through putting together a good spending plan. Now, before we get started, what you're going to need to do is probably pause this video and gather your financial statement. So this is your credit card statement. This is your bank statement. This may be your mortgage statement. You're going to want to begin to accumulate the information that's going to allow you to put together an accurate spending plan. Now, once you have all that information pulled up, loaded up on your computer, printed out in front of you, that's going to make it really easy to complete this spending plan. And this is something that you're not going to have to do every single month. You're going to spend some time and energy up front to put together an awesome spending plan that you can follow, that's realistic, and then you're going to stick to it. So pause this, go get your materials, get your mortgage statement, get your bank statement, get your credit card statements, pull in your spouse, your significant other, if they're the ones that do a lot of the shopping or grocery shopping, or if you guys have multiple cards, get all the information that you're going to need to be able to track your spending and your income. So don't forget your pay stubs. Or if you guys are running your own business, don't forget to pull up your bookkeeping software to understand how much you're actually making or taking home, how much you're paying yourself, or how much your business is generating. So with that being said, let's get started. Now, the first section of this spending plan is going to be what we consider your fixed expenses. Now, a lot of times I like to think of this as your non-negotiables. These are things that are not going to change. Think rent, mortgage, home maintenance fees, internet, phone bill. These are bills that are going to be reoccurring no matter what. Now, go through each of these line items and ask yourself, is this a bill that I need to pay? Is this a bill that I am responsible for? A lot of my younger clients may look at it and say, hey, I don't actually pay the phone bill. I'm still on mom and dad's plan. So if that's you, right? For example, you may not need to account for your phone bill, but if you do eventually want to take it over, you want to be responsible for paying that bill, then you are going to want to input it into your spending plan, even if it's not an expense that you are currently assuming. Now, go through each of these line items and figure out what your total fixed expenses are. This is going to give you a real good baseline. Now, so if you went through the module that is attached to this video or attached in this section, then you're going to know that there's multiple types of expenses, some primary ones being fixed and variable. Now, some of your variable expenses may not be happening every single month, like grocery shopping or entertainment and dining. Some of them may be happening every quarter, like paying your auto insurance, or may even be happening annually, like travel. One of the things I want to know here is that for the expenses that aren't happening every single month reoccurring, you're going to need to prorate them. So if you were traveling and you were spending, let's say $1,200 every single year on travel, then you know that you need to be budgeting for $100 a month to equal that travel expense. So I want to cue in on one of the more important line items here. And this is the two areas where I often see people either not gathering accurate information or totally just guessing and underestimating this specific expense. And it is entertainment and dining out, and grocery shopping. So when we look at entertainment and dining out, I want you to think everything that is fun. So that's going to the bars, that's going out to restaurants, that's stopping at McDonald's, going to the movie theaters, going to shows and concerts, things that you do on a regular basis that are fun, that are social, and that you may not always be spending the same amount every month, but there is a range that you typically, based on your habits, spend in. So I want you to pull up your statements. And this is not, oh, I think I spend $300 a month, or I think I spend $250 or whatever it is. It is pull up your statements, whether you want to use a piece of paper and go through with a highlighter line by line, or if you want to just pull up your digital copy and go through every single thing on your statement for the last month that is considered entertainment and dining out. Now, if you are really, really detail oriented and you want the most accurate budget possible, you can go through your last 3 months and take the average. Now, when I sit down and I do this with clients, I just go through the last month for the sake of time. Now, you need to ask yourself, is this a reasonable month? If you're looking at a month like December, there might be a lot of extra spending in there that's not normal, that may need to be prorated throughout your year. But if you're looking at a month that does not have big holidays, major birthdays, and is a little bit more reasonable, you might want to use that month. But again, you're going to be doing yourself a disservice if you are not putting together an accurate budget. So I'm a big fan of overestimating on the ones that I'm unsure of. So when I go through and I do this with my clients, what I do is have them round up their purchases. So if they went to McDonald's, they went to the movies, they bought a concert ticket, just round up to the nearest dollar, right? And plug that into your calculator and go back 30 days at the very minimum. It's better to go back 90 days and take the average. But if time's of the essence and you don't want to spend the time doing that, then you can go back 30 days to begin putting together a reasonable budget. So as you're going through your line items, you're going to be checking off everything that is entertainment and dining. Once you go through, you total that up, plug that number into entertainment and dining. I want you to then go back and do this again for grocery shopping, right? And when we talk about grocery shopping, we're not talking about TJ Maxx and Ross and Target and some of the shopping that you may be doing for your home furnishing or home decor, or just personal shopping. We're going to capture those line items later in this list. So this is shopping at Costco. This is shopping at your local grocery stores, right? This may even be that spontaneous run to your corner store because you need a little bit of sugar for baking, whatever it is. All right, so now you're going to go through and you're going to look at your charitable givings. You're going to look at each one of these line items and you're going to ask yourself, again, is this an expense that is typical for me? Now, some people may be looking at, for example, charitable giving and they say, well, I do give to charity, but I'm more of a spontaneous giver. I don't give every single month reoccurringly, but I do. Christmas time comes up, I cut a check to this organization, or sometimes I just donate to this cause when I feel like it. So you're going to want to do the best you possibly can to get an accurate understanding of what your charitable contributions are throughout the year, and then divide it by 12. This will be prorating it. The next line item would be transportation and gas. So in this line item, I want you to assume Ubers, taxis, lifts, in addition to fueling up your vehicle. And then add a buffer in for anything that's going to be routine maintenance, whether that's getting your oil changed or rotating your tires. You're going to want to account for all the expenses that are going into transporting yourself. Now, this next line item, personal shopping and spending. This could be your Amazon purchases online. This could definitely be your TJ Maxx, your Target. This is the shopping you do that may not happen every single month or may not happen regularly, but definitely happens. Now, some of you guys out there, I know a lot of my clients and a lot of my friends struggle with how much they spend in this category. Now, if you are falling into that boat, it's okay. One of the things that I want you to do going through this budget is start to limit what you think is reasonable. Now, a lot of times in our lives, we all have different financial situations. We all have different needs. And we're going to have a list of what I like to call non-negotiables, right? These are items that you are not going to give up, even if it means that you could save a little bit more, you could invest a little bit more, you could make a little bit more. These are things that truly matter to our self-care and being a happy, functioning person. So you need to set boundaries for yourself, both on your non-negotiables, but you also need to set boundaries on yourself so you don't go overspending and putting money into areas of your life that aren't truly going to drive happiness. So this section of personal spending and shopping is also another maybe culprit that I see regularly on potential overspending. So just be conscientious. If you're known and you know yourself, if you know that you like to go to TJ Maxx or Target often and there's a little bit of retail therapy going in there, maybe you just limit how much you're able to spend based on the income you are making. Now, continue to go through this list. We look at things like childcare. Now, if you don't have children, maybe you have pets and animals. I know that I have a dog and 2 cats, and both of those cost me money. So without kids, I may not be paying for childcare, but I do have a form of pet care, which is not a line item in this budget. So you want to account for spending in that respect. Continuing on, you have clothing. Now, I don't think you guys are shopping and spending on clothes every single month, reoccurring and regularly. But again, this is something that you're going to want to prorate. Ask yourself, how much do I spend shopping for new clothes every 6 months? Or how much do I spend every year? And then prorate that so you can come up with an accurate monthly figure. Moving on, we're looking at membership fees. Again, this is one that a lot of times is not calculated accurately. Some membership fees are annual, some are quarterly, a lot are monthly, and you set those things up and they may be little and you may never actually look at your statement with a fine-tooth comb, and you'll start to realize, wow, there's a lot of subscriptions on here that I don't actually use anymore, that I don't value, and maybe you might want to consider canceling them. So go through your subscriptions and don't forget to account for annual subscriptions in addition to the monthly subscriptions and the ones that happen infrequently. Going down to the next line item, we're going to be looking at gifts. Gifts are another one that you're going to need to prorate. I like to think, who are the people that you typically buy gifts for? Is it your spouse, significant other, children? Who are you buying gifts for Christmas? Who are you buying for birthdays? Don't forget your anniversary. You need to think about and really accurately figure out how much you spend on gifts per year. And then again, divide that by 12 so you can come up with a good monthly number. Now, travel is a big one. I sit down with tons of people and I go over their financial goals. And travel is honestly one of the biggest financial goals that I see popping up from plan to plan to plan. So it makes a lot of sense to plan for travel. It is one of the things that allows us to learn and experience the world. And to me, is one of the best learning tools, period. So you definitely, if you're into traveling, you definitely want to plan for it. Now, when we talk about planning for a big, massive trip, something like a honeymoon that's going to happen in 2 or 3 years out from now, maybe this is a goal to invest for. But if you want to take a trip every year or a trip every 6 months, this is a goal that needs to come out of your cash flow. So you need to ask yourself, what are my habits when I travel, right? Am I a backpacker that's, living in the cheapest accommodations I possibly can find? Or am I a little bit more bougie and I want to stay in that 4-star, 5-star hotels and it's going to cost me a lot more? There's no right or wrong answer so long your income can support it. But you want to take, again, a realistic picture of how you operate, and in this case, how you travel, how frequently you travel, and how many people are going to be traveling with you. You want to look at transportation and housing because those are going to be the big expenses for traveling. Yes, you may spend a little bit more money shopping. You may spend a little bit more money eating out, but the reality is you're going to have to eat, right? Even when you're at home. So there's some money already baked into your budget. If you go back to groceries and entertainment and dining for that expense, you're really going to want to look at transportation, room and board. So planes, trains, cars, whatever automobile you choose to transport yourself in. And then how are you going to house yourself, right? What type of accommodations are you going to be seeking, and how frequently are you going to be traveling? Prorate that number. Take it annually, take it every 6 months, but figure out what is a good monthly figure that you can input here. Now, this is not an all-inclusive list. There's going to be other expenses that pop up, which is why we have a line item for other. So if you can think of anything in your personal world that has not been captured in your fixed and variable expenses, this is where you're going to input it. You can use commas, you can stack a bunch of different expenses that may have not been captured in this spending plan in one, and then give us the total, right? And as you're going through this spending plan, you're going to see that you're going to get numbers that populate automatically and does the math for you. So if you need to come in here and make any small adjustments, it's going to be fairly simple and easy to do so. We want to make this as simple and easy for you as possible. Now, the next section that we have here is your financial plan. And I think of this as the contribution that you are making towards your future. We have everything from personal development, that's an investment in yourself, whether that's coaching, whether that's financial planning in this case, whether that's your nutritionist. You may have captured some of the things like a gym membership up in membership fees, but you're going to want to address anything that is involved in personal development, whether that's the amount of books that you buy or just educating and developing yourself, because this is truly an investment in your future. And I don't view it as a expense, more or less, it's an investment in yourself. The next line item here is your emergency savings fund. Now, one of the rules of thumb we use as a financial planner is that you're going to want an emergency savings fund that's anywhere between 3 and 6 months of your living expenses. So if you come up here and take a look, you're going to have your living expenses. That is a total of your fixed and your variable expenses. Now, based on this number, you're going to want to set an emergency savings goal that's 3 to 6 times that, depending on your situation. Now, we've learned with COVID that we may be out of work for a little bit longer than 6 months. So if you're more comfortable increasing that, I would say max it out at 12 months of expenses. So you're going to say, hey, listen, my living expenses is $3,000 a month, $10,000 a month, whatever it is. And I'm comfortable having 3, 6, or 12 months of an emergency fund. And this is how you're going to set your emergency fund savings goal. Now, to meet that savings goal, if you have not met it already, you're going to want to contribute money on a regular basis to a savings account. Maybe it's a high yield savings account, a money market account, but a savings account that is liquid, that you can access that cash immediately. So if an emergency pops up, you can handle it. Moving down line items, we're looking at short-term savings. So this is something along the lines of, I want to take my family to Disneyland in the next year, and I know it's going to cost me a little bit more than our routine travel. What do I need to do to hit that spending goal? So you're going to need to do some math. What is this short-term savings goal that you have? How much is it going to cost? When do you want to hit it, right? Based on figuring that out, you're going to know I need to set aside an extra $200 a month if I want to make this goal a reality. Next line item is life insurance. So this is a form of risk management. If you have people financially depending on you, you may see life insurance as something that is a smart thing to add to your financial plan. And depending on what type of life insurance that you purchase, you're going to be paying a premium. You're going to want to input that premium, your monthly premium, in this line item here. Same thing goes for disability. So if you are, let's say, a doctor and you have disability insurance and you're paying monthly or quarterly or annually for that disability insurance, prorate it, get your monthly figure, plug that in here. Same thing goes for long-term care. Next is your non-qualified accounts, a lot of times referred to as your taxable account or your brokerage account. This is an investment account that you're using to build your wealth that is taxable on the gains or the money that you're making, but it's accessible to you whenever you need it. This type of an investment account really does a nice job of complementing any type of retirement account that you have. Now, we're going to learn more about this in future modules, but I want you to understand as you're going through this spending plan, understand what each of these categories are. Next situation is going to be education, whether you're paying potentially for kids' tuition, your own tuition, not student loans. We're going to capture student loans in the debt section. IRAs, your individual retirement account, if you're contributing to that on a regular basis, how much are you putting in? Again, break it down to a monthly number. Same thing is going to go for your 401k or company-sponsored retirement plan. Some of you guys may not have a company-sponsored retirement plan. Don't worry about it. You don't need to fill it in. Some of you guys may have one that you don't contribute to. You're going to want to consider contributing to it and how much. Some of you may be small business owners and you are going to be responsible for setting up your own retirement plan. So again, we're going to cover this in future modules, but this is going to be the line item that you can account for those contributions. Same thing here, simple and SEP IRA accounts. These are retirement accounts for your retirement contributions and profit sharing as well. Your HSA and your FSA accounts, these are health savings accounts and flexible spending accounts. These are going towards medical needs. But again, this is a contribution to your financial future. And then of course, we have a line item in here for other. So if there's anything that we missed, there's any type of investment that you're currently doing, maybe you love cryptocurrency and you're dollar cost averaging into your favorite coin or whatever, you can put that information in here so you know how much you are contributing on a regular basis to your financial future. Now, moving up, we're going to look at the last spending section of this spending plan, and that's your liability. So if you have a mortgage, if you have credit card debt that you are making payments on, if you have an auto loan, student loan, personal loan, payday loan, any type of liability payment is where you're going to want to account for not the balance of your payment, but how much you are putting towards it monthly. So if you have a credit card that has $1,000 balance on it and you are paying $100 every month, you're going to input $100, not the full balance here. And again, as you go through this, it's going to tally it up and do the math for you. Now, once you get done with these 4 sections, that's your fixed expenses, variable expenses, financial plan or future, and your liabilities, you're going to have a clear understanding of the total monthly expenses highlighted down here towards the bottom. In this case, it's $3,000 as I just plug some random numbers into this example. Now, the next stage of this spending plan is to account for your income. So we have 2 sources of income here that we can account for. Maybe this is job 1, job 2, maybe this is husband, wife, maybe you're a single person and you have 1 source of income. This is the income that is being paid to you through what we call payroll. You're going to have federal taxes, potentially state taxes, and then Social Security and payroll taxes deducted. So this is going to come out as FICA. So you're going to want to go through your pay stub and you're going to want to input your gross pay. So this is pay that you receive before taxes. And then you're going to want to start subtracting out what your current payments towards federal, state, and Social Security and payroll taxes are. Now, if you get paid once a month, it's going to be pretty easy for you to say, okay, this is my monthly pay. This is what I pay towards each of these different tax buckets on a monthly basis. But let's say you get paid every 2 weeks. A lot of times this happens. If you're getting paid every 2 weeks, there's going to be a few months out of the year where you have an additional paycheck. So you have some extra kind of fun money coming in. Now, I'm again a big fan of being conservative when it comes to building out your spending plan. So if this is the case, my recommendation is to just account like you're getting 2 paychecks a month and then have those extra paychecks that come in be purposed towards something that maybe is your travel goal, or maybe is something that's going to be a little bit more of a variable expense. Maybe it's you invest it, maybe you put it into your emergency savings account, maybe you put it towards paying down credit card debt. Again, you're going to need to align your priorities and figure out what the focus of your financial plan is going to be. But I like to create a budget that is more conservative, so just accounting for 2 paychecks a month. Now, if you get to this point and you realize, whoa, I don't really have much money left over, right? What you're going to see down here is unallocated income at the very bottom. Now, this number could be positive and this number could be negative. Depending on this number, you're going to take some different actions. If this number is positive, you're going to be asking yourself, how can I take this and apply it to the things that matter most in my life? What does that need to be? Is it saving more in cash? Is it investing? Is it an investment into myself? Is it treating my family members? Whatever that may be is a personal decision. Now, if this number is negative, you're going to need to ask yourself, how can I get it positive, or at the very minimum, break even? Now, There's really only two ways to do this. You're either going to need to increase your income or you're going to need to decrease your expenses. Now, right off the bat, it's probably going to be easier to decrease your expenses to some degree, but you may hit a point where you're like, I can't go any lower. And so if you hit that point, the only other option is to increase your income. Now, if you have additional income besides your pay, things like rental income, if you're receiving child support or alimony, maybe you're part of a passive business activity, you have disability income, trust income, whatever it may be, you can capture that income under other income. And again, it will do the math for you. So use this spending plan to help put together how you guys want to be spending your hard-earned money. Look at the outcomes and ask yourself, is this reasonable, right? Can I live a life if my budget's negative every single month when I begin to account for things like travel or my auto insurance that doesn't happen on a regular basis? If it's positive, pat yourself on the back and then ask yourself, how can I use this money to enhance my situation, enhance my happiness, enhance my financial security, and apply it to the things that matter most? This exercise is fundamental to you becoming financially successful. This is something that is a must do, and we want to make it as easy for you as possible. So please take the time. It'll take you an hour tops to gather your documents, go through this process, involve your significant other, your spouse, if you guys do your finances together, and come up with a spending plan that everybody can agree upon. Now, once you have that spending plan, all you need to do is stick to it. And we're going to explain how to do that in future modules through automating and through creating a systematic financial plan. So hopefully you guys enjoyed this quick breakdown of how to put together an awesome spending plan. Please take the time to do this. It is so important. And with that being said, catch you guys in the next module.